Hi, I'm Martin Smith and this is your UFXBank Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's rises and fallers. The euro-dollar pair had a weak start, but gradually during the week strengthened its performance. The pair gained about 1% and was last trading at 143.01. The British pound had a solid performance against the dollar throughout the course of the week, gaining 1.7% and closing at 165.04. The US dollar struggled against the Japanese yen, finishing the week at 80.78 with a loss of 1.10%. The dollar CAD struggled back and forth throughout the week, eventually closing with a gain of 0.22%, and the pair last traded at 0.9759. Looking at commodities now, gold had a mixed week but managed to gain 1.6% by the close of Friday trading. The precious metal was last trading around $1,536 an ounce. June crude orders had a roller coaster type week but were able to close at $100.75 per barrel, moving up 0.5% for the week. In top news this week, the Obama administration has again refused to label China as a currency manipulator. Instead, it was hinted that the world's fastest growing economy is not making enough of an effort to allow the yuan to rise. The US Treasury Department has stated in a report that the progress made so far is not enough and a much quicker improvement is required as the yuan remains significantly undervalued in foreign exchange markets. The report was expected to come out in April but was delayed. US lawmakers have argued that the exchange price gives China an unfair advantage in the international marketplace. After discussions took place over the last month, China has indicated that it is ready to increase the rate of appreciation of the yuan, but not at the pace the US would like. The Canadian dollar marked a fourth consecutive week of declines versus the greenback. The loonie dipped against 14 of its 16 most traded counterparts, falling about 3.5% against the Swiss franc and 33.2% versus the US dollar over the course of the month. Because the currency is so tightly linked to the price of crude oil, its largest export, the recent struggle in equities and commodities markets has likely had a major influence on where the CAD stands now. If commodities markets begin to stabilize more, how the CAD reacts will likely determine the future trend of the currency. In Europe, the sovereign debt crisis has managed to once again entrench itself as the leading topic of economic concern. According to ECB board member Jürgen Stark, it's estimated that Greece could raise as much as 300 billion euros by increasing efforts to sell off nationalized assets. Greece's current debt burden stands at approximately 330 billion euros, and the country is planning to raise 50 billion euros by 2015 through the privatization of national firms. This may not be enough, however, to appease growing criticism, and there had been some talk regarding a restructuring of Greece's debt, but there are many firmly opposed to such a move, Stark being one of them. Well, that's all we have time for today. I hope you enjoyed our weekly review, and I hope you'll join us next week. Until then, be sure to visit us at ufxbank.com for simple, safe, secure trading. For UFX Bank, I'm Martin Smith. Good luck and happy trading.